is getting ready to make its stock market debut. The popular review site expected to price its initial public offering today, setting the stage for an IPO tomorrow. Yelp is set to raise as much as $100 million, which would value the company at more than $800 million. Yelp was founded in 2004 by a couple of former PayPal employees, including Jeremy Stoppelman, who thought of the idea while unsuccessfully searching online for a doctor. As the business grew, it attracted the eye of Google. Yelp ended up turning down a takeover offer, and now Google has become a bitter rival.
One of the concerns is that they get a lot of their advertising from Google, and Google has a competing local service. So when you look at these social media stocks, you really have to look at where the advertising comes from.
Meanwhile, Yelp has also made a push into the daily deals market, like Groupon. As for how some other recent IPOs have done, the consumer review site Angie's List went public in November. It rose 25% in its first day of trading, but since that first day, the stock has lost ground. Groupon, meanwhile, went public in that same month, rose 30% in its first day of trading, but the shares have since lost a quarter of their value. For a drill down of the real business behind Yelp, let's bring in our Bloomberg West editor-at-large, Cory Johnson. Cory, give us some help with Yelp.
Help Yelp? I was going to use that later. Now it's just now imitation is sincerest form of flattery. Look, let's look at the business. Let's look at Yelp's revenues. That gives us a first clue as to what these guys are doing and how fast their business is growing. Now, going in just 4 quarters time from 17 to 25 million, who wouldn't take that? But to be sure, that growth is slowing. If you look at the growth rate, you start to see that the year-over-year growth rate for this company, they've only given us about 8 quarters to look at. Well, it's slowing down. Again, 63% growth rate, it ain't nothing, but coming down from 81, 83, that's not quite as good. Of course, profits is what any business is all about. And if you look at Yelp's profits, well, there aren't any. There are losses. The size of the losses are hard to look at just not just because losing $1 million in 14-week period isn't a great thing. But what's really important, of course, is the operating profit margin. So those are adjusted operating profits. It's some Cory math there. I've stripped out some stuff that I don't think should be in there, like depreciation and some other one-time items. But let's look at using those numbers, look at a profitability ratio, if you will, operating profit margins. And the operating profit margins, they do seem to be ticking a little bit better. If you look at those operating profit margins, what you see is numbers that are kind of getting better. The losses may be suggesting that someday, if this business gets big enough, they might not lose money. 10 times revenues? I don't know. That's for an investor to decide. But what you see here is a business that's getting a lot bigger and losing a little bit less money on a percentage basis every quarter, and that's probably a good thing. John?
Cory, this is a review site, but in many ways you could argue it is a restaurant review site because so many restaurants use it. What do you know about where the reviews are coming from and why that matters?
Yeah, John, well, they like to say that restaurants are only 22% of the reviewed businesses. But take a look at this. This is the percentage of reviews. So again, if you think about it, if, as Rocky Agarwal's pointed this out online, if they get 1 review of a plumber and 50 reviews of a restaurant, that doesn't mean it's a plumbing and restaurant business. 42% of the reviews are of restaurants, 20% of shopping. So 62% of this business is in those 2 categories. A vast, I can't say majority, but 42%, a big chunk of that is restaurants. So you can look at it as a half empty or half full situation. They've got opportunities in lots of other businesses, or they've failed to be really big in any other businesses and restaurants where they've got competition from the likes of OpenTable and, as Gaskins mentioned earlier, Google. They've got some swimming to do.
Great insight, as always, Cory Johnson, our Bloomberg West editor-at-large. And to better understand how Yelp's reviews affect the businesses listed on the site, we went out with our cameras and asked some small business owners in New York if Yelp has helped or hurt them.
I don't think that the reviews have helped or hurt the business, to be honest with you. I think that they're done sometimes when people have only been to the restaurant once.
Definitely hurt, because I don't know if they know about the filtered reviews, and then they only see the negatives that they show.
I'm not sure what the consequences of the reviews are. I think that unfortunately they're not always fair, and we do accept the fact that people may not like what we do, but I think that unfortunately with what's going on with Yelp, there are some what I would call non-constructive criticism.
I think that Yelp is great. The reviews, although it's nice and pleasant to hear nice reviews, We're always looking for feedback.
Yelp has helped our business a lot. You can't imagine how many times people have said to us that they saw we had 5 stars and that was the reason they were coming to us.
Joining us now from Chicago to discuss Yelp's IPO, the challenges the company may face, is Rick Sommer of Morningstar. He's a senior equity analyst who covers internet and technology companies. So, Rick, we talked about a lot just there. What is the one thing about this business you think that everybody needs to know?
Yeah, so and you got to look at this from a somewhat of an optimistic lens. You know, we're pretty bullish on the community. We like communities overall. Looking at companies like TripAdvisor, where people come out, we see good levels of engagement as uniques have grown, reviews have grown, which really shows to us there's some sort of at least virtuous cycle there where people feel compelled to write more about the businesses when they go out and look at it online at the same time.
Here's the key issue, that people like to use the site, but the merchants who Yelp relies on don't always feel as strongly about Yelp. And you just heard some of those comments there, people who are frustrated that the negative ads get a lot of attention. Is that a concern to you?
So I think that's a concern. I mean, we have to put some context around this, right? So if we had 100 reviewed businesses and 30 of them are very poorly reviewed, I would guess there's probably at least 30 businesses that aren't going to care for Yelp very much. So we got to put that in a little bit of context. Generally speaking, Yelp is good for businesses in terms of driving awareness. Ultimately, the challenge is how much are they willing to pay to drive that awareness? Are they willing to pay extra for enhanced listings? The economics of local advertising is extremely challenging. And you're seeing that in Yelp's profitability or lack thereof so far.
And what about the competitive landscape? We highlighted that Jeremy Stoppelman, when we founded this company, he had the flu. He needed to find a doctor online, couldn't do it. Back in 2004, there was an opportunity. But what about today? What's the landscape like?
So, I think they have a good platform that they can try and leverage. I think there's bigger challenges. So even though they have a community and users may continue to come out there, businesses have other options to be able to spend their dollar. And we all know they don't have big marketing departments where they're sitting around analyzing this. So they may run a Groupon, they may run a Living Social. They've got folks from Foursquare calling on them. They have folks from Facebook and Google calling on them. If they find better alternatives for advertising, regardless of the community, we may not see a great deal of monetization out there at Yelp. And that's one of their biggest challenges that they face going forward.
Tell us specifically about the Google threat. How concerned would you be as an investor in this company of what Google is capable of doing?
So I think Google's approach is a little bit different. Where you look at what they're doing, they're certainly trying to create a community. We've seen it on the consumer side with social networking, trying to create this community. Creating a community from scratch is quite challenging at the same time. I think Google has a big leg up with one key asset, and that is Google Maps. So when you go to a business and say, would you like to buy a places listings so that you can actually be within Google Maps, that is extremely compelling. The bigger issue is, will users come out and start to actually review these sites at the same time? But we got to remember, we're all carrying smartphones these days, and that's becoming increasingly important. Google today drives more than about 50% of Yelp traffic. Looking at that alone, that's a pretty significant risk point if Yelp's not able to wean themselves off of their dependence on Google going forward. Google has every interest in trying to direct their users more towards Google properties at the same time.
I want to also get to the deals part of the business. Yelp, when they first came into that part, that area, they were very excited. Then they kind of pulled back a little bit. But there is an opportunity for us here to compare Groupon to Yelp. What do you think on that front?
So two things. I think one, it's a much smaller opportunity. We've talked often about Groupon, how we really think there needs to be this customer relationship component of how you actually manage that small business. Yelp arguably has somewhat of a relationship with an advertising customer, and this is an additional revenue stream. I think the implementation that Yelp has is more interesting. It's more intent-driven. So you and I could be searching at Yelp from a mobile site. We look for sushi. Then all of a sudden a deal pops up. The conversion of those sorts of deals should be reasonably high at the same time. The cost of acquisition of the customer is reasonably low. All that is very compelling. The bigger question is how big is that market for Yelp? Generally speaking, we think that is what's going to tip that business into better profitability, where they can continue to find new sorts of revenue streams where they can get not only local but also national advertisers.
Rick, quickly before we go, I spoke to one banker today who said he's getting a lot more calls from small companies that want to be sold because they're worried the IPO window, it's not going to be hot for much longer. Here's a company that's going public before Facebook's anticipated IPO. How important is that for Yelp?
Yeah, it's going to be interesting to watch, right? This is a very small offering. We're looking at, 100 million-ish in offer. We're looking at sub-billion-dollar market capitalization. And once again, from our perspective, we're looking at an overpriced company. We think this company is worth about $9 a share, substantially below where that pricing range is. Certainly important for Yelp. I mean, they've kind of tapped out of that venture capital cycle. I don't think venture capital firms are going to continue to invest in the life cycle for Yelp. It's going to be very interesting and very important for the industry overall. If this IPO doesn't go off particularly well, we're going to see a lot of lookalikes that are going to be scrambling around.
All right. Well, thanks, Rick, for sharing your perspectives. Rick Sommer of Morningstar joining us from Chicago on Yelp.